An interesting stock in the networking security niche is Zscaler. Zscaler's selling point is the Zero Trust Exchange, or as a company puts it, the world's largest security cloud. This platform securely connects apps, devices, and users on any network and provides the improvements to online navigation and business apps necessary for improved productivity. The company states that its platform processes more than 300 trillion daily signals to generate an artificial intelligence machine learning effect. These include over 280 billion daily transactions, leading to some 9 billion incident and policy violations prevented per day. Although the stock is down hard over the past year and a half, top-line revenue in the last reported quarter was up 51% year over year and beat forecasts by $22.8 million. Zscaler's revenues have increased steadily for the past several years. Earnings have registered 4 sequential quarterly increases in a row. Growth has slowed, but second quarter's overall growth came in at 45% year over year. Lastly, the current price is well below the average street price target of $155.67 per share. Let's look. And we're now looking at a monthly chart on Zscaler that goes back to 2018. And in the upper left, you can see that the symbol is ZS. Now, for disclosure purposes, I do not own any shares of Zscaler at this time. Looking at the chart here, we can see that we were above $350 a share, had a hard move on down, probably somewhat assisted by the rate increases. Now we're at a current $87 per share, but we're still above where we were in 2020, that plunge there. So at least that's some recent decent good news. Moving into the volume, not going to show you too much, so let's move on into the MAC. Now you can see that the fast line is right here, closing in on negative 25, with the slow line right here. Both are below zero, indicating weakness, and there's a separation. That separation is going to take a number of months to repair, and you can see that here in the histogram. The bottoming and basing is beginning here, but we still have a number of months before the histogram gets toward that zero, before, back up here to the MACD, before that fast line does bottom base and climb up and through that slow line. So you have a number of months. So lots of time to watch this, lots of time to check out the fundamentals. Here the price rate of change is giving a run for it with the bottoming and basing, the fast line moving on up to the slow line, but we're still near that negative 200. So we have a ways to go before we hit that zero line. Again, you have lots of time. Into the RSI, we're at a very weak 25.05, some bottoming and basing going on over the last year or so, but still very deep, very negative, needs to move sideways and then on up. Into the stochastics, again, the same thing as well as Williams, very, very negative, but it does have decent growth. And when you check those fundamentals, make sure that you are thorough with your due diligence. This is a possible stock pick in a relatively high growth niche, but be careful because the risk is all yours. ChewDog out.